In this video, I'm going to share with you a super simple investment strategy that you can run on autopilot. I'm also going to give you access to a tool which will help you to project how much money you will make in the next 10, 20, 30 plus years. Then I'm going to give you access to the best broker account. So when I say the best broker account, I mean the broker account with like the cheapest fees, but also access to the best or like the widest choice of investments. So once I've walked you through that, I'm going to give you insight into two investment opportunities you might want to consider if you're just starting out with as little as $5 a month. And at the very end, I'm going to talk you through, or you're going to learn how you can automate this so that, you know, as your paycheck is coming in, the money goes directly into the brokerage account and you're automatically investing every month. So before we kick off, just a quick disclaimer, like this information I'm sharing with you is for educational purposes only. It forms like one arm of my strategy. I have other things, but I will share them at another time. And it's purely just for you to learn, right? To educate yourselves, and in no way is it financial advice. So the strategy, what is the strategy? The strategy is called dollar cost averaging. So what is dollar cost averaging? Dollar cost averaging basically means you're investing the same amount of money every month or every week in the same stock or fund. What this means is that no matter whether the stock is going up or down, you're always putting money in, and you're consistently putting money in over a long period of time. You know, when I say long period of time, I mean 10, 20, 30 years. And the benefit of this is that, you know, it means that you're buying at the high points and at the very low points as well. And what this does is it means that over time, you get like a mean cost at which you're investing at. So the extreme lows balance out the extreme highs. It ends up in a way that you're buying at a very reasonable price. If you're just starting out, you know, you can over time, you can start to increase that amount of money. So say you're young and you're just getting into this for the very first time and you can only afford like £25, £50, $25, $100. Great, you start with that. As you get older, as you gain more experience, as you earn more money, you can start adding in more money to this. And this is great because it's almost, this will form like one arm of your wealth building strategy. I wouldn't recommend that you know, like say you're taking home like 2K a month, I wouldn't recommend that you put like all your money into this one thing. But I would say to myself, look, I'm starting out. This is one element, this is one strategy, this is one tactic that I can use. And then like in future videos, keep an eye out because I'll share some other things that I'm doing as well. So what are the benefits of dollar cost averaging? Well, this strategy is known to beat the market over the long term. So you're never trying to like compete with experts or whatnot to try and buy low and sell high. You're not tearing your hair out. You're not constantly checking the market. You just let this strategy run on autopilot in the background. You can have peace of mind. So now I'm going to share with you how you can project how much money you'll make over the next 10, 20 years. And so what you want to do is you want to get access to the compound interest calculator. Now there's a link below to this compound interest calculator. And what I'm going to do now is I'm just going to walk through how you can use this to figure out how much money you're going to make. So the first thing you want to do with the compound interest calculator obviously is you want to select the currency. They've got dollars, they've got euros, they've got pounds sterling as well. And then the next section you've got like initial investment. So with the initial investment, this is like the lump sum or the deposit you're going to put in to start off, right? So this could be anything, you know, if you've got £1,000 or $1,000, $5,000, it could just be that you have like £100 or $100 or $50. And that's totally fine. That's totally fine. You just fit in what your initial investment is. Then next you've got like the interest rate. Now the interest rate we're going to put in here is 7. What we're doing here is we're going to put together like a conservative estimate. The funds or the potential things that you might want to consider that I share later on in this video, you know, typically the interest rate that you're looking at is going to probably be like 8, 9 or 10%. But what we're trying to do here is we're trying to manage expectations. So we're going to just put in 7 for now, just to get that conservative estimate. Next, we're going to put in for years. That's like the time horizon at which you're going to execute your dollar cost averaging strategy. So this could be 10 years, 20 years, could be 30 years. But let's just put in 30 years for now. And then what I'll do is I'll just convert this into, like, let's just say $1,000 or £1,000. Next it says additional contributions. So additional contributions is like, you know, what you're going to deposit each month. So here we're just going to, it's already pre-selected, so we're just going to select deposit. And then here for a deposit amount, we can just put in like £100. And you can see here that you can decide whether it's monthly, quarterly, every half year or every year, but we're just going to stick it to monthly because that's how we're going to set it in the broker account, which I'm going to share with you a little bit later. Here I'm just going to leave this at the end, so that's like at the end of the month, you know, once you get paid at the end of the month, you're going to drop it in. And I'm just going to leave this blank, and again, this is just to leave it as a conservative estimate. One of the things that's really important to consider is that what this compound interest calculator does not factor in is that all of your dividends that you're going to be paid with some of the funds that I share with you later on are not factored into this. So in theory, you should, you know, bearing in mind that we've set it at the interest rate at 7%, and bearing in mind that we haven't factored in any kind of dividends that are going to be paid through, you know, you should make a fair amount more than the overall fee or figure that we get at the end of this this calculator. So now that we've filled everything in here, we're just going to press calculate. So future investment value is 130,000, and you can see here it kind of gives you a breakdown of like every year what happens and how your money is growing, including the interest but not including the dividends. And obviously you can play around with this because you know, maybe you want to drop in a little bit more money, maybe you want to drop in 150, in which case you would make £190,000. But like I said before, you know, it's worth considering that I'm going to share some other investment strategies with you and some other ideas that you might want to consider. Again, just education, not financial advice. Now I'm going to kind of run through how you can set up the account. So what you want to do is you want to Google interactive brokers. Now, one of the real benefits with interactive brokers is that they're really cost effective. They're one of the most cost effective platforms when you're buying and selling. Now, I'm not going to recommend you sell with this strategy. And then another great thing about interactive brokers is if you have a cash balance with them, so you have like a bit of money just sitting there, they actually offer an interest rate. So I think it's, at the time of looking at this, I think it's around 4%. Now, the next tip is that you want to look out for tax-free benefits in your country available with interactive brokers. So what I've done is I've dropped a couple of links in the description below to link into the interactive brokers ISA page so that you can open up an ISA with them if you're in the UK. And you'll also find the link to interactive brokers for the TFSA, so the tax-free savings account if you're in Canada. When you hit the link, which I put in the description below, you have to kind of scroll down. So they don't make it like overtly clear where you have to go. You just have to scroll down here, and then you will just find it here. It just says open an ISA account. You click there, and there you go. One quick point is that if you already have an ISA with someone else, there is functionality so that you can transfer your ISA from your existing provider to interactive brokers, and that's a process I did have to do, and it was quite a long-winded process. What I'll do is I'll make a separate video on that, so just keep an eye out for that. And so now that you've set up your account, I'm going to break down like 3 potential opportunities that you might want to consider investing in. One thing that you might want to consider is the FTSE All-World ETF. The benefit of this fund is it invests in economies across the world, you know, so developed economies like North America and Europe, but also emerging economies like Brazil, China, South Africa, and more. So what this does is it offers diversification of some of the biggest companies across the world. Because this is a fund, the fund manager will actually automatically rebalance your portfolio, or the portfolio he has, depending on changes in the market cap. So what I mean by that is, for example, if America's economy declines and China starts to rally and emerges as the next superpower, your portfolio will automatically be rebalanced according to these kind of circumstances. Now, one of the reasons you might want to consider like the all-world cap index, so this fund that I just mentioned here, is that yes, historically over the last 100 years, like US has been the dominating economy. You know, all things come to an end. There's this investor guy called Dalio, and he mentions in his book, he has this book called The Changing World Order. He maps out, and I'll put a visual here, where different economies are. And you'll see in the blue right now, the blue economy is the US economy, and the red line coming up is the Chinese economy. And actually, funny enough, you've got the black line there as well, and the black line there is the UK economy. And so you can see how things are in a constant state of change. Things go up and down. Historically, yes, the US over the last 100 years has been like the dominating economy. But looking at this table, looking at this graph, if you're gonna bet on the future, it kind of looks like there's a changing order of things taking place or about to take place very soon. When I say very soon, I'm not sure how long. Could be 30 years, could be 50 years, I don't know. But it's just something to factor in. And so with this in mind, like when you're investing in this fund, what it is, it's almost like it gives you the best of both worlds, in the sense that yes, you are invested in the US. You know, this fund holds stocks like Tesla, Amazon, Apple, holds stocks in Canada of the Toronto Dominion Bank. And in China, it has Tencent, Alibaba, it has Taiwan Semiconductors and Toyota in emerging economies as well. Now, I've put a link in the description to a bit more information on this fund. It's always worth doing your own due diligence. Now, another opportunity you might want to consider is the Vanguard S&P 500 Growth ETF. It differs from the All World one, the one that I just mentioned previously, because it only invests in the US stock market. So one of the things you might want to consider is like, do you want to invest only in US companies, or would you prefer to have a bit more of a portfolio with a cross-section of companies across the world? This fund will also automatically rebalance your portfolio if there are any changes in the market cap of different companies. So what does this mean? It means that if, for example, Nike suddenly, Nike or Nike's market cap suddenly decreases, the fund will automatically replace it with the company that has overlapped it. As an example, this fund holds stock, US stock in Apple, Tesla, Amazon, Microsoft, but it also holds things like Netflix off the top of my head, Starbucks, and Nike as well. Now you'll see up on the screen now there's a table which just outlines the past performance of the Vanguard S&P 500 Growth ETF. Now one of the things you might want to consider is that this has actually historically outperformed the All World Index fund that I mentioned just before this. So you really have to make a decision as to whether you want to base your decision on past performance, or do you want to factor in the things that I mentioned around Dalio, the graph that was plotted out in his book, and consider that there may well be in the future a changing world order where the Chinese economy grows and the American economy shrinks. I've put a little bit more information in the link in the description below so that you can have a little look at like what this fund offers. But like I say, you know, it's really up to you depending on your unique circumstance, you know, whether you want to invest heavily in big companies in the US, invest heavily in companies across the world. Now what I'm going to do, you will just see up on your screen now, is I'm going to show you, once you're logged into Interactive Brokers, how you can find these different investing opportunities. And so yeah, it's super simple. You just come into this section here where it says symbol or site search, and you can just type in the opportunity that you want to invest in. And what you can do is you can just, for example, type in Berkshire Hathaway, and you see it comes up. So now I'm going to share with you how you can set up so that your investment becomes a recurring thing that happens automatically, so that it's automated and you don't have to worry about it. You can just let it go and focus on other things. So you want to get into your Interactive Brokers account. As you can see, mine's in black. Now I changed the setting somewhere to make it in black because it's a lot easier to see. So, but that's a story for another video. So you want to go to trade, and then in trade you want to hit recurring investments. Now I have two accounts, so I'm just going to hit my ISA account, and then you're going to hit over here to create recurring investments. And so here what you want to do is you want to fill in the asset, so the type of fund or which company you want to invest in. You're going to hit the start date. You're going to type in how much, so if it's £100 a month or $100 a month, you do that. And then you can choose an interval here, so it can be daily, weekly, monthly. I would veer, for myself, I set this up as monthly. It's just simple. It means there are fewer fees each time you make a transaction. You can do a lump sum at the end of your payday each month. And then you can set an end date as well, which is super good, or no end date, so it's entirely up to you. You click continue. There you have it. You've got your recurring investment. So if you're watching this on YouTube or Rumble, drop some comments below if you've got any questions. Look, I'm here to help. I know that there's quite a lot of information here. I may have missed out a few things. So if that's the case, just let me know. But naturally, if you're in the group, you have direct or greater access to myself. You have greater access to Alex, who's an entrepreneur. He's based in Canada. He's built 2 companies, he's coached dozens of entrepreneurs, and is helping a load of guys with action planning and goal setting. And we also obviously have Ralph as well, who's a clinical psychologist. He has 6 years of leadership coaching. He works for a large consulting and leadership company in Europe. So look, all the best, stay on the path, and thanks for watching. Have a great day, take care.